chart watchers and Decision Point faithful. Welcome to this Monday, March 1st, 2021 episode of Decision Point. I'm Erin Swenlin, and I am here with my father, Farrell Swenlin. It's our job to prepare you for the week ahead. We want to show you what's going on in the market, and then we'll talk about just some of the things that I know you've learned over the years, Dad, this week. It's going to be a really interesting show. How is everything going?
Everything is going well. You know, on our last show, we've had some complaints about my sound. And last show, somebody left a note, get Carl a microphone. And I had a microphone, I still have, but it wasn't properly connected. So I think we've overcome that problem and some other problems. So let's keep our fingers crossed today.
Yes, you do sound much better. So that's good. All right, well, we've got quite an agenda, like I said. I'm going to go ahead and do the SPY overview, and we'll look at the big four: dollar, gold, crude oil, and bonds. And then we're going to talk, I'm going to pass it to my dad. He's going to talk a little bit about Bitcoin and, of course, GameStop. And then no inflation. That's going to be an interesting one to hear from you, Dad. And then we're going to both go over Farrell's 10 rules. And this was very enlightening to me when you sent it to me. So I think our viewers are going to really enjoy those 10 rules. And then, of course, I will finish with the diamond of the week. I presented it actually last Friday to Market Views TV and did pretty well today, but I think there's still room for it to run higher. So I'll get to that, of course, at the very end of the show. But without much further ado, let's go ahead and get started and look at what's going on in the markets in general. So this is our Decision Point sector scoreboard. Currently, we only have two neutral signals on it. And that means that the 20-day EMA is below the 50-day EMA on these sectors. But they're neutral because that negative crossover of the 20 and 50 occurred while they were above the 200-day EMA. So rather than go into a full sell signal, we prefer to go into a neutral signal. Long term, everyone is on a golden cross. The 50 is above that 200-day EMA. So interesting to see these defensive areas of the market. They're still not getting much love. And honestly, I'm not seeing much in the way of improvement going on in those sectors so far. As far as our Decision Point scoreboards go, I updated these on Friday, and I suspect, honestly, that some of these may have changed with the big move we had in the market today. We've lost all of these short-term buy signals, and the NASDAQ has really been hurt the most. Interestingly, we lost the intermediate term PMO buy signal. Those signals are determined at the end of the week from the weekly chart. That's how we get our weekly our midterm PMO signals. The long-term signal is determined on the monthly chart. As far as the trend model, that's all on a daily chart, and we talk about that all the time. So we'll get looking at those further. But interestingly, you know, the Dow was still holding with its 5-day EMA over its 20-day EMA, at least last Friday. I suspect since we had a nice bounce today, that is still the case for the Dow. All right, I'm going to go ahead and switch over, and we will look at what is going on in the market right now. And you can see my screen just fine?
Yes.
Oh, good. Okay, so, you know, we had gotten that breakdown. This is a rising wedge, of course, a bearish pattern, and we had gotten the breakdown, but we were holding at that 50-day EMA. And we, sure enough, ended up with a bounce, even with very negative indicators. You know, I'm still not really that encouraged by what we're seeing because, you know, the VIX, we did on this inverted scale, we saw it move up to its moving average, but it's still under it. And typically when the VIX is under its EMA, regardless of where it is, that tends to be a more weak time in the market. You'll find that price action just tends to be weaker. You're going to see maybe some of these rises like we've seen, but then we're going to end up with a move to the downside. So You know, right now I'm not liking the looks of it. I do like the bounce. It makes sense coming off of that 50-day EMA, but just isn't going to last forever. And our indicators are certainly telling us that we should be very cautious and careful right now. But wow, nice 2.42% move in this SPY. It's hard to be bearish today.
Okay, don't go, don't go.
I will not.
The couple of things I wanted to mention. First of all, the size of the move we got today, 2.25 points. Look at the total volume on the S&P 500. It's not even up to the 1-year average line. So even though SPY had some higher volume than the 1-year average, it's really more important to notice what the total volume on S&P 500 was.
Absolutely.
And the green arrows, we didn't talk about them last time, but the green arrows, I plugged in on this chart because it became apparent to me that we had a little bit of a cycle going here, and it didn't anything further to the left. It's just not there, but starting in November, we can see about every 15 days we have a low, and one of the things that last green arrow needs to be moved over. Don't do it now, but it's still a matter of we could be starting a new cycle, and don't know about that.
Mm-hmm.
The main thing I wanted to is mention that is that cycles show up, and sometimes they can be very helpful. Sometimes they disappear just at the time you need them. But if notice that each one of the cycles has a right translation, which means it's peaking. Prices are peaking into the right side of the move from low to low. So, and I'm not sure. I'm not sure where that cycle low, last one, is going to really show up, because right now it's possible that we're going to have a perfectly centered price top in that cycle, which means it's getting less bullish at this point. If it tops in the first part of the cycle, that's called a left translation, and that's bearish. But as you see, it's not always that helpful, but this one kind of got my interest.
Yeah, it is true. You can see those tests as we go along. First of all, it was the 20, and then we had to come down to the 50, and now we came down to the 50-day EMA once again. It makes sense that we're going to see a little bit of upside movement here, but I have to say that was a great catch, seeing that the total volume was really low. When you get an exciting move, if you will, of, almost over 2.25%, you would expect a lot of excitement as far as participation goes, and certainly not there with the total volume today. All right, quick peek at the 1-year chart just to give us a little more perspective here. Right now we've come about 83% out of that bear market low, which is pretty impressive, but it does look like, we did top here at that all-time high, and it's getting a little bit dicey right now. All right, a couple of our indicators. I think we've talked about what is up to date on this chart. Well, it looks like everything's up to date. That's great. We did see another contraction of new highs from those previous highs when we had that rally out of those lows. So that's a bit of a concern. You don't want to see that on a rise. But we do have some climactic readings here on breadth to the upside. So, Normally, I would say, ooh, this could be a really nice initiation, but given that failure to see more volume on this move and less excitement, maybe it's going to take another day of excitement to get people involved. But the fact that they didn't get involved today is a little concerning.
Since it's coming off of the price low, we have to assume that it's an initiation climax at this point.
Mm-hmm.
Upside initiation.
Upside initiation, yes. All right. The Swenlin trading oscillators, mainly sitting in neutral, really not giving us a whole lot of information, but I would say that participation, seeing the amount of stocks losing their 20-day EMA, including on a day where we had such a great rise, and then look at the loss of momentum in the S&P stocks right now. That's,
those
that's going to
haven't
be hard to
updated yet.
sustain.
Those haven't updated.
Those haven't updated,
yeah. But they're still quite low considering we're almost at new highs.
Absolutely. Our intermediate term indicators, we still have a really strong bullish bias, but they are trying to tip over right now in the intermediate term. And then, of course, we've had these negative divergences that set up at that all-time high market top when we did fall. I'm looking at this chart and, the percent with crossover buy signals. Again, you have a nice move or you're seeing this upside movement, and yet you still aren't seeing any improvement here in the amount of crossover buy signals. So it'll be interesting to see what this reading turns out to be today after the close. We will be talking about that in our DP alert. If you're interested in hearing, you'll need to go to our website, DecisionPoint.com, and consider subscribing to the DP alert. We're going to talk Bitcoin, so I'm going to leave that up to you. But let's go and we'll look very quickly at our big four. The dollar, I'm actually going to pull up the 1-year chart here on the dollar. I had a discussion with Dave Keller this morning in our free trading room, what his thoughts were about gold and the dollar. And, he's like many of the technicians, doesn't favor gold pretty much ever. But we did have the discussion, we've been seeing this weak dollar, and it really hasn't translated much into, a nice move for gold. We do have that buy signal now coming in on UUP, and we do have a positive RSI. So everything is telling me that we're going to see higher prices. It's just been, like gold, it's just not doing much.
Well, I believe that is because of Bitcoin.
Mm-hmm.
The cryptos, I think they're sucking up all the air in the room.
Mm-hmm. Exactly.
They're talking about cryptos being a store of value, which is, I just can't believe it. It's incredible.
It is. Not to put anyone down who's decided to get into Bitcoin, but wow, it is kind of strange. the cryptos still confound me. They really do, but they do have a lot of favor with a lot of people. But that is something that people have been talking about, is that maybe gold isn't seeing much action even when the dollar is falling. Mainly because, like you said, people may be getting into Bitcoin instead, although it's a lot more expensive right now. GDX, the gold miners, they're sitting here on that support level. They really need to hold it. This level could come down just a little to take care of that top there. So there's still a little bit of play between 30, at $30. That's the line in the sand for me. There's just nothing under the surface here really improving yet for the miners, but they are in really oversold territory now for some of these indicators. So we'll want to keep an eye on it, because if they do start to show some improvement, being so oversold, that would be great. But this area of the market is just not very exciting these days. So, all right, USO still in a pretty much confirmed uptrend. We did lose this more steep rising trend that we annotated last week. it's oil was due for a bit of a pullback. You can see we had the same thing happen. Didn't even have to test the 20-day EMA. I suspect we're going to end up seeing a rebound here, although I have to say an overbought PMO turning over is never going to give you that much, not going to make you feel too good, but the RSI was so overbought, price was so overbought. And so this does seem to relieve that condition somewhat.
Look over to the 1-year chart for me.
Yes.
Okay, that's not, no, that didn't help. But what I wanted to talk about was the fact that the uptrend was accelerating and it's broken down. It's the same kind of mechanics as a parabolic move, except not quite as steep, of course.
Mm-hmm. All righty.
So it may end up being a little bit more of a pullback than we expect.
Right. Now, bonds, of course, have been struggling because we've seen yields rising very, very quickly. And of course, that's put pressure on bonds. And we've seen that big decline. Of course, after that big pop in the yields and interest rates, they did pull back somewhat. And so we did see bonds break out of that declining trend. But I don't know about you. This looks like a PMO ready to top in, well below the signal line. I'm not seeing much here as far as bonds.
I can't figure this out quite, because the 10-year had interest, 10-year yield was up quite a bit today. And I would have expected a bigger move in this particular security here. Mm-hmm. I would have expected it to go much higher. So I don't know quite what's going on in here, but the yields have pulled back for 2 days in a row.
Yes.
The charts aren't updated yet, so
yeah, as far as the yields.
Check that.
All right, so that pretty much covers the big four. I'm going to pass it back to you to talk to us about Bitcoin and GameStop.
Okay. Let's start with GameStop. It's they're back in trying to make it go higher. I just thought it would be worthwhile to talk about this because no, I don't think they're going to do this again, because a lot of the people and there were a lot of people hurt in this particular move. They're not coming back, and I just don't think it's going to. They certainly got some movement on it, but my personal opinion, no, it's not going anywhere. Not anywhere near up to here again. That they're going to be faked out on that. Notice that on OBV we have a reverse divergence, meaning this is a lower top here, this is a higher top, which means it's taken a lot of volume to get this up this high. So I think that's the end of it.
Mm-hmm.
That's not what I wanted to see. I've got 2 GameStops up here.
There you go. There's GBTC.
There's what I wanted. This is the Bitcoin ETF. And here again, we've got negative divergences on this, on the PMO and on OBV. So we've got a broken parabolic here, and then it's another parabolic, which is broken down. The negative divergence could mean this is going to go further down than people expect. The main thing to remember is that it's got a long way to go down when it finally does. There's absolutely nothing in here. You're not even going to get a tulip bulb when this thing is finished. it maybe it's going to go higher, but there's no, you have to really be making things up to get into this. And I would be willing to trade it because there's most stocks are so overvalued that they don't have as much fundamental basis below them as there should be. But anyway.
It's the same kind of idea, I suppose, huh?
Excuse me?
It's sort of the same idea. You're getting into a stock that
Right.
doesn't necessarily have great fundamentals, just
Yeah,
based on price.
most stocks do have fundamentals, and that will ultimately uh, cushion a decline. But when these things don't have any. Now, GameStop, let me jump back there. The the base on GameStop, which is where it belonged, because of their business is just not much of a business anymore, is about $5. Okay, so all this up here is smoke waiting to be blown away.
Mm-hmm.
And I wanted to mention, and I've been hearing people talking about inflation's coming, that there's no inflation and right now, but it's coming. And I was thinking this morning, wait a minute, there's plenty of inflation. It's not into everything, but inflation is certainly present in the stock market. I mean, stocks are blown way out of where they need to be on a fundamental basis. And real estate, it's running through the roof again, just like in the around 2005 to 2008 when that was topping out. So yes, there is inflation, and I think it's pretty well handled at this point in where it's being absorbed. I don't know that it's going to show up in other places. And I had a thought.
No, definitely. Prices are totally inflated. That makes a lot of sense. And, we're probably going to be paying more at the pump soon. It'll be really interesting to see how rising interest rates are going to affect the, real estate market. That's, something that's kind of hanging over everybody's head.
I know it came to me. What is the one of the reasons for the rally today, I think, the main reason was because the House passed the latest stimulus bill, which by some accounts, they figure that about 1/3 of this 1.9 trillion is going to go into the stock market. Well, what we really need is about twice as many stocks valued appropriately to take all that much money. So if that money does come into the stock market, which I have no reason to doubt that it will, I believe that it's going to drive prices up.
Yep.
I mean, that's something we should expect.
Absolutely. All right.
Okay, I think are we ready to cover? Before you go to the Farrell's rules, I wanted to cover the rule that I wanted to cover.
Sure. Excellent.
Yeah. On that, let me see the Dow forecast chart. One of his, I'm going to jump the list here, but number 8, bear markets have 3 stages: sharp down, reflective rebound, and then a drawn out fundamental downtrend, which is something that I was expecting here. This is a heck of a first leg down, but then it stopped. I was thinking, okay, then it stopped here. Maybe we're going to head down. And then this one I thought was pretty much the last chance of that coming to fruition. But that rule is pretty good. 3 stages down. It's a good rule to be aware of and to follow, but sometimes it just doesn't happen. Just doesn't happen. But then this doesn't ever happen either. This doesn't ever happen. So.
All right, let's go ahead. I'm going to show the rules here.
Right, and by the way, if we don't get to cover all 10 of them, look up Bob Farrell on the internet, and he is about the biggest name there is in this business, in the technical analysis business. He was many decades at Merrill Lynch, and this is his.
All right. All right, markets tend to the mean over time, and that's honestly, some of our indicators will do the same. So just something to consider. Excesses in one direction will lead to an opposite excess in the other direction. So if we're having a market like it is blowing up on excess, that does suggest that we're going to see quite the pullback eventually, or correction or bear market to counteract. There are no new eras. Excesses are never permanent. Look at GameStop. Look at Bitcoin.
Right.
Exponential, rapidly rising or falling markets usually go further than you think, but they do not correct by going sideways. This is an interesting one, I would say, because a lot of folks are going to think that, oh, well, we just have to, work it out by moving sideways and then we can just go back up. But that doesn't always work out. The public buys the most at the top and the least at the bottom. We've got Robinhood and we've got Acorn Stash, all of those various, we've got a lot more people in the public now buying, and they're buying a lot and they're buying quickly. Fear and greed are stronger than long-term resolve. Absolutely. Markets are strongest when they are broad and weakest when they narrow to a handful of blue chip names. Now that to me is interesting because that S&P 10 that we always talk about, they've been moving sideways. They look pretty weak right now. And there's number 8, which you...
Yeah, skip that one and let's go to number 9. We're running out of time here.
Yes.
This is the one when all the experts and forecasts agree something else is going to happen.
Just ask Mark Young, our sentiment guy.
Right. That's so important because right now, we've got a lot of agreement on inflation. What's going to happen there? I think that's probably going to be proven wrong.
Mm-hmm.
And I'm not quite sure what the outlook on the market is at this point, except that there's so many people that think it's going higher.
Right. And bull markets are more fun. I think we already know that rule. The question is, when is that bull market going to run out? And, I wish we knew exactly, but in the meantime, it's important to, I'm calling it the wall of worry. I'm not out of the market like I usually am right now because I am worried intermediate term. But, in the short term, if you're protecting yourself, the more the better. All right. And PH, Parker Hannafin, is my diamond of the week. This particular area of the market is starting to show some nice improvement. Industrials in general, I think, are doing well. I kind of am getting on this one a little bit early. Another one is ROAD, R-O-A-D. Really, I'm banking on, if you will, the infrastructure bill when that does come out, because these areas of the market, heavy construction, industrial machinery, there's a good chance we're going to see them really pop. They're already doing well. You can see that as far as this one, industrial machinery, we're getting a lot of outperformance, and then outperformance by this one against not only the SPY, but also it's a good choice within the industry group itself because it is outperforming its brethren. Still have a PMO buy signal here, a little bit of an acceleration on that move. RSI is positive and not overbought. We got a really nice breakout today and closed above it. So I'm liking this one. And that is all we have today for the Decision Point show. Hope you enjoyed it. Do stay tuned next Monday for our next one. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.